Hey, we're going to get rolling this week, and even though it's between Christmas and New Year's, and a lot of people are still on holiday, the markets definitely aren't on holiday as they're rolling in here. We've got plenty of volatility to start this week off, so we're just going to get going here. This is the thing right now is this rallying here this week in beans. It's all on South American weather, and as you can see in this chart here, once we got above this $13 area, this thing just broke out and momentum carried us and trading to a high today just around 13.85. The question is how much more gas is in the tank in here on this bean contract. When we see, when we look at the South American weather right now, we just don't see it being quite as severe enough as temperatures are moderating and that there are some chances of rain as we move into southern Brazil. And with Argentina, we still need to remember they're about 2/3 planted with soybeans, so it's still more of the spring of the year. It's hard for us, but we do have to respect this recent move to bet that we're in an all-out drought trade right now here in South America. As we look towards the next chart, what we want to bring to your attention here is the major production areas, of Brazil, and the issues are in the far southern states, and whether if you look at Rio Grande do Sul or Paraná, you can see between those two, they raise about a third of the Brazilian bean crop. That's the focus of the crop issues. As you move more towards the central portion of the country or up north, things are in pretty good shape. Keep in mind, if they lose 10% of their production down south, that's 3 to 4%. So it is something that we have to pay attention to when you're looking at this weather in South America. The next thing we want to take a look at right now, though, is where the world markets are at. And we really want to focus on U.S. offers out of the Gulf compared to what they're offering out of Brazil. And you would think that if that they've got major crop issues in South America, or specifically Brazil, that their cash prices would rally and that they wouldn't want to sell as much on the export market. Well, when we look right here for January delivery, both beans out of the Gulf and beans out of Brazil are about the same price. They're only 3 cents apart. As we get to the February timeframe, though, U.S. Gulf beans are offered at $14.53. Brazil beans are at $14.37. And when you get to the March timeframe, U.S. beans are about 44 cents more expensive than what they're offering out of Brazil. When I look at where these cash prices are at right now, it tells me that these crop issues in South America might be a little bit more hype than reality. If they had big issues in here right now, they wouldn't want to be as aggressive on offering beans on the world market. The other thing we need to really keep in mind when we're looking at comparing U.S. to Brazilian bean prices and what freight rates are into China. Going from the U.S. Gulf to China right now is about $1.82 a bushel. But when you look at Brazil to China, along with the U.S. Pacific Northwest to China, that costs about $1.47 a bushel. Therefore, as we look towards that March timeframe right now, you've got Brazil beans into China about 75 cents a bushel cheaper than U.S. offers for the March timeframe. That kind of figure says that there's not the major crop issues down in Brazil. Since we're on the world markets, we'll just take a quick look at where world corn offers are. South America is really not offering any corn on the world market in here. Brazil needs their first crop, and you're not going to get a new crop harvest in here until May, June, July in here for Argentina, and the second crop is available. So right now it's basically U.S. corn and Ukraine corn. As you can see, it's a 13-cent difference. That's about as wide as it's been here over the last couple of weeks. U.S. corn has been competitive with Ukraine, and so we just don't read a lot into it. It's been about the same. The thing we'd like to point out, though, is when we're getting our export business right now on corn, it's mostly to Mexico or Canada. It's not heading out into the Far East. They're buying some Ukraine corn. Just don't read a lot into this. U.S. corn is competitive. We're not out of line there. As we flip over to the wheat side of it, though, U.S. Gulf wheat for hard red winter wheat is expensive on the world market. That's why our export pace has been slower. As you can see, EU wheat or Russia wheat, Romania wheat is still the cheapest offers out there. That's where wheat is struggling in here. That it is just a bit too expensive on the world market in here to get new export business. As we look to finish up in here right now, I think that there's some things on the table. One thing is that we got the January crop report that's just around the corner. That's out on January 12th. We wanted to bring up where world prices are at because our winter rallies tend to be more demand-led than weather issues in here. If it is weather, it's about South America, but that's why it's important to look at where South America cash grain offers are at compared to the U.S. A year ago, when they had all those crop issues with the second crop corn, Brazilian corn prices kept on going up and up and up to price themselves out of the world market. That's not happening in here on soybeans right now. That's where we don't think that the crop issues this year on soybeans are like the second corn crop we had a year ago. The other thing we got to bring to your attention here again this week is the inflation bet. I mean, crude oil prices have had a good rally in here over the last week. That's something that's supportive to commodities in here, and really kind of supportive to the corn market. That we've talked before that if you want to make an inflation bet on the ag side of it, it will be on the corn side. The one thing that stuck out to us on this last push up on the grain markets is the old crop premiums to new crop. Right now, July corn's around a 59-cent premium to December. July beans are a $1.10 premium to the January contract. When you look at corn carryout in the 1.4 to 1.5 range, you look at bean carryout in the 350 million bushel range in here right now, we shouldn't have that much premium on old crop compared to new. We think that's a spread to look to watch as we move ahead. This is our last webinar for the year, except for the 1 week when we had some technical issues. We were able to bring them to you every Tuesday for all 52 weeks. We look forward to doing that again in 2022 as well. Thanks for tuning in. Any questions, give us a call or drop us an email. Have a great day.